Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's July 1st, Wednesday. Uh, we got the beginning of a new quarter, and yesterday was kind of a quiet one they expected. Sometimes there's a lot of volatility in the markets because it's the last day of trading and everything, and that could play a factor with mortgage rates and in competition with the dollars for investment dollars with stocks. And wasn't a whole lot going on, but stocks rose up. We even had some improvement. Uh, and then to kind of move on here, we do got some economic data to share. So let's jump right into it. We got a big report here, ADP employment from month of June. Last month in May, actually it was revised higher. It actually had a minus 2.76 job losses last year or last month, whereas it got revised to an improvement of 3.065 million jobs in May. So it kind of put it more in line with the Bureau of Labor Statistics numbers. So that was obviously very good news. Forecast we're calling for June is 3 million, and it came in under 2.369 million. But again, we had a really pretty much a flip of a reversal for May's numbers. Now, to move on here, we got the ISM manufacturing PMI for the month of June. Anything below 50 is contraction. Anything above is optimism or expansion. And as you can see here in May, it was in contraction period at 43.1. It was supposed to bring us much closer to expansion of the forecast at 49.5, and it exceeded that. It now is in expansion territory at 52.6. Those are very good numbers to have kind of kick-starting the economy moving forward here. Last but not least, we got the construction spending for the month of May. This was actually revised even further back in April. The numbers construction spending was even revised a little bit lower down to 3.5%. But forecasts count for a 1% increase in May, and it actually continued its trend downward of 2.1%. Later today, we'll get some the FOMC. They had their meeting earlier in June, and we'll see the minutes from that. So investors are kind of anxious to see their thoughts on what's all in the tools in their toolbox, to fight the pandemic. Of course, this is prior to actual spike in numbers, so it's just beginning. And so obviously the next one will weigh a little bit more because everything right now is, of course, about COVID. Unless there's really any big numbers to spike it data, that's going to be what's the central focus on for investors. So let's jump over to the headline. Speaking of such, stocks are up a bit. So as we talked about the COVID cases and some spikes in some areas, Pfizer came out has this vaccine they're working on. They're one of the several companies, pharmaceuticals that are working on some vaccines and has some positive results. So this is kind of creating a little bit more optimism for investors. As we stated before, they're hoping for a V recovery, and if we have these uptick of cases and nothing to no positive outlook, it could be something that could be much longer process than expected. So this is a welcome news for them coming out here. So let's see how this is playing on the bond market and see what mortgage rates are doing today. So mortgage rates actually started a bit lower today, so this would have me a little bit more concerned as we see a bit of a trend here. So we have this trend going upwards here. We still have that, but we started the day off here, and now we're up about 3 basis points. Or I'm sorry, we're actually at 0 right now. I think we were up earlier at 3 basis points earlier, but right now we're at even, so there's no change in mortgage rates. So I'll show you why also the trend here. Yields have been working its way back up. It just broke above its 50-day moving average, hitting the next level of ceiling of resistance, which was a pretty tough floor of support here until it finally broke below it about a week ago, and it's been down since. Now we'll see if how strong this is. Maybe it could push it back down, but again, we had this downward trend here, and this we'll have to see if this can keep it and kind of push it back further and keep these lower rates. So just being cautious of you could float, but I would be cautious about possibly locking in at some point, capture these gains before yields continue to rise if they do rise. All right, so that's pretty much the wrap for the day. If you guys are in California looking to buy a refinance, I'm going to go ahead and leave my information down below. I am a loan officer, and love to be able to help you guys out with your solution, talk to you a little bit about what you guys are doing. So feel free to contact me. Again, my contact information will be put in the description of this video. Take care. Bye-bye.